Welcome to today's LinkedIn Live. I am your fearless host, Keith Conley, who has a face for radio, but hey, I'm on camera and I'm here for you. Really excited to talk to you today. Thanks for joining us. I welcome your questions, I welcome your feedback. Uh, would love to interact with you. Go ahead and put your questions in the chat, put your comments in the chat, and send your rotten tomatoes through email. Today is a topic that is very interesting to me, but it's important for everybody, although it's not everyone's all that interested in the topic. It's a rather, um, for some people at least, it's a rather morbid topic. It's a topic that they'd rather not discuss. Today, we're discussing life insurance. People a lot of times don't like to talk about life insurance because naturally life insurance is for when we die and we don't like to talk about that. But at the end of the day, it's a vital topic for your family, for your spouse, for your children, and it can do so much. And there's a lot to learn about this topic, and there's a lot of myths and a lot of things that need to be clarified. So I'd like to give you a foundational overview of life insurance and what it is and how it works and some of the benefits. Today, we're going to be answering a series of questions that I'm asked all the time about life insurance, but again, I'm happy to answer your questions. So, life insurance, it's something that everybody needs, especially in your younger years, but there's a lot of reasons why people in their later years might need life insurance, and we'll talk about some of those reasons today. Uh, I have life insurance. Some of you may have bought life insurance. Perhaps you bought it from me. Thank you very much. And I'm excited to talk about this topic today. So, life insurance, what is it and why is it so important? I think that's a really good foundational question. Well, life insurance is a contract between you and an insurance company to pay a death benefit when you pass away. Seems pretty cut and dry, but at the foundational level, that's what life insurance essentially is. If you pay the regular premiums, the insurance company is contractually obligated to pay you a death benefit. So, life insurance is a big topic, and it's a financial safety net for your family in the event that you were to pass away. And there's a lot of different reasons for it, but essentially, broadly speaking, it is a safety net. Perhaps it'll help you pay the mortgage, it'll pay off debt, it'll help pay living expenses, perhaps it'll pay taxes when you pass away, or funeral expenses. But life insurance has many different uses, and there's many different types of life insurance. So let's answer the second question that I'm asked. What are the different types of life insurance policies available? Now, to begin, I want to say, at its very core, the most important life insurance policy is the one that you have in place when you pass away. But that being said, there are different types of life insurance policies, each with their own benefits and each with their own drawbacks. But the policy that's best for you is going to it's going to vary between individuals. So let's talk about the first type of life insurance policy. This is the policy that most people, if not everybody, needs to have. And it's a simple term life policy. And term policy, just think of it as renting a policy. It's a temporary policy that could last 10, 20, or perhaps 30 years, and it will guarantee a death benefit if you pass away within that allotted time frame. It's really good for young families, maybe whose income isn't super high, because it'll pay you a large death benefit for a smaller premium price. And I love term. I sell lots of term. I think term is really important uh, because it is the most simple, most affordable, and straightforward policy available. If you're 30 and you're just starting your family, A term policy is super important because you probably have, a mortgage, you have young children who need support if eventually were to pass away. You might have some debt, some student loans or credit card debt. You have, your children who you may need to have support for, 20 years or more for the beginning of their part of their lives. So that's a really important policy. And typically, if you're in the beginning part of your adult life, I would look at nothing less than $1 million. If you're in good health, it's going to be very affordable, but that's going to depend on a number of different factors that we'll talk about later. The second type of life insurance, broadly speaking, is permanent life insurance. Now, there's different types of permanent policies, and this is where it gets a little bit more trickier. This is where people get a little bit more confused, and there's a lot of myths and there's a lot of different ideas out there. But let's just talk about some of the foundational basics of the different types of permanent policies. At its very level, a permanent life insurance policy is guaranteed to pay a death benefit whether you die at 40 or age 400. Uh, and so naturally, the policy is going to be a bit more expensive, but it's also going to have other benefits that you might be able to receive during your life as well. There's a lot of reasons for a permanent policy. Not everyone necessarily needs a permanent policy, but there are good reasons even for middle class people to consider having one. The most frequently sold policy for a lot of years was a whole life policy. And a whole life policy, it offers lifelong coverage as long as premiums are paid. Now, people hear whole life and they think, I got to pay the premium for my entire life. And the answer is you could, but not necessarily. I've sold a lot of whole life policies where folks will pay a premium for 10 years or perhaps to age 65, and then the policy will stay in place. And with any type of permanent policy, whether it's a whole life or a different policy, two basic questions need to be answered. Is this policy for cash value to access during your life? Or is it for a death benefit, or is a combination of both? Ultimately, all policies pay the death benefit, but I can design the policies to focus on the cash value accumulation or to focus on the death benefit, and that's going to have an effect upon the premium cost. So the other type of permanent life insurance policy that's become very popular in the last 15 years or so is an index universal life policy. The truth of the matter is that a lot of insurance companies that offered a whole life no longer do so. There's a couple out there. I know Mass and Penn, Northwestern Mutual all offer a whole life. And there's some others out there, but a lot of them are now focusing on index universal life policy. And a universal life policy also provides lifelong coverage, but it offers a lot of flexibility. With a universal life policy, you can have flexibility to change the premium amount. You can change the death benefit, and it can receive interest, whether in the form of just straight up interest, or it could receive interest based upon performance of certain indexes, such as the S&P 500. Now, the first myth that I want to dispel here with these index universal life policies is that when you're receiving interest from an index like the S&P 500, you are not investing in the S&P 500. They're paying interest based upon what those indexes do without actually investing in them. And so typically, with an index universal life policy, they're going to have a cap, meaning that they're going to give you the maximum amount of potential interest. And so we'll just say 10%. If what that means is if the S&P 500 has a positive year and it receives at least 10%, you're going to receive 10% interest in growth of your cash value and death benefit in any given year. Or if it's 2%, you'll receive 2% or 5%. But the max you will receive is 10%. So if If the S&P 500 returned 30% that year, you're only going to get 10. And that might not sound so great, but what it also has is a floor. And so years where the stock market or the S&P 500 does poorly, let's say it loses 30% in a year, you just stay zero. So instead of the highs and the lows and the plateaus, it's more like a mesa. It goes up and then it plateaus and then it goes up, and you get that interest only in years where where the index performs favorably, and years where it doesn't, you just get zero. And so they're very nice policies to have. And it's not strictly an investment product. It is not investing. It is insurance, and that's one of the big qualifications I'm very careful to make with my clients, because when they talk to a lot of other people who do insurance, they're saying, "Hey, here's this great investment vehicle. You're investing in the S&P 500 or the stock market." No, you're not. And I do a lot of investments. I do a lot of investment management, and this is not an investment vehicle. This is an insurance product, uh, where you're receiving some performance based on the stock market, but it's not strictly investing. Some of the other types of life insurance policies include variable life insurance, and that's kind of like an index universal life with the flexibility options. But in that respect, this is more of an investment type product where you're actually investing in mutual funds, so your cash value can go up and down. They're not my favorite types of life insurance policies, but they're very good. And if you have someone who says, "Hey, I want my young child, maybe under the age of 5, to get a life insurance policy," this might be a good option. But they're certainly not my favorite just because of the fees and the costs. Another type of life insurance policy is called final expense. And these are typically permanent life insurance policies, but for a very small amount, 25,000 or less. And they're basically policies that someone would purchase if they're not insurable. For a normal type policy, maybe they have a cancer diagnosis or diabetes and they're not able to qualify for another type of life insurance policy. And they're essentially just to pay final expenses, your burial costs. So that was a long answer for question number 2. Would love to hear any of your other questions that you have. How do you determine the right amount of life insurance for you? That's a very subjective question in a lot of respects. I do a lot of work to help clients figure out what the right amount is for you specifically. And it's going to be based upon what your needs are, as well as your budget, essentially. But I like to use something called the DIME approach. D stands for debt, I stands for income, M stands for mortgage, E is for education. This is a bit of a more subjective approach, and I find that a lot of times it overinflates the amount of life insurance you actually need, but it's a good starting point. So D stands for debt, I income, M mortgage, E is education. And that's the education part of where it gets really subjective. I've had a lot of people say, "Hey, if I pass away, I want my kids to have $750,000 available for college." And I've had people tell me, "Oh, I don't want them to have anything." And that's really up to them. But that's a really good way to figure out how much life insurance you need. But some of the other factors you might want to consider is, how old are your dependents? What is your income? What kind of tax consequences would your estate have were you to pass away? And what kind of business needs might you need to have a life insurance policy for if you're a business owner? What factors influence the cost of life insurance premiums? Well, there's a number of different factors: age, your health, lifestyle, policy type, and coverage amount will influence your premiums. But I've had a lot of people come to me and say, "Hey, I'm a type 2 diabetic. I've never gotten a life insurance policy. I've tried. I tried with my, the place where I get my auto and homeowners insurance. I've tried with several other places, and I've never gotten a policy. And those are very difficult cases. And what I always do for folks who come to me in that scenario is I will do what I call pre-underwriting, where I will get some basic information. For diabetics, I'll get some information on their medications, their date of diagnosis, and their A1C levels. And I will shop multiple insurance companies, and I will just say, hey, I have this hypothetical person, and if they came to you with these numbers, what are the chances that you would offer a policy? And they'll come back and say, hey, this will be a standard, or this will be a table number, or hey, we won't be able to offer this policy. And when I gather all that information, I'll review it with the client. I'll say, hey, this looks like the insurance company that's most willing to offer you a policy. So let's go ahead and apply. And if you apply, this is what we're expecting. And this is, what the cost will be. Now, it's not a guarantee because I just got this information from them on paper. A lot of times they will have to go through an actual half an hour or so medical exam where someone will come to their house to do a blood and urine sample and a questionnaire. And from that information, they'll get an actual formal offer or decline. But at least we know where the best chance of them getting a policy. And I have been successful in getting some people policies. Now, some people I haven't, but some people I certainly have. Can I change my life insurance policy if my needs change over time? Possibly. You can always purchase additional policies. You could, if for a permanent policy, you could also trade one policy for another. If that were something that were needed. A lot of times, term life insurance policies will have conversion privileges, which essentially means that they will be able to convert the entire part or a portion of their death benefit and their term policy into a permanent policy. And the reason that's a good thing is, let's say you bought a policy 5 years ago at the highest preferred rates, because every life insurance policy, the insured is given a health rating. And let's say someone got super preferred 5 years ago, and 2 years ago they were diagnosed with cancer. Well, they're no longer insurable, but they could convert their term policy without proof of insurability into a different type of permanent policy at that super preferred rate. So that's a really fantastic benefit. What happens if I outlive my term policy? Well, this is something that I handle on a regular basis. I have someone come to me. I actually have someone I'm working with right now. They're 60 and they're saying, hey, my term policy is going to be over in 6 months. Most times, term policies, when that is over, that period of that term of maybe 10, 20, or 30 years is over, you will be able to keep the policy, but every year the premium is going to continue to increase. And eventually it will most likely become unaffordable, and you'll just either drop the policy and get a new one, or you'll go without insurance. Someone once asked me, how's the application process work for life insurance? Well, with the life insurance, we do a life insurance needs analysis. Well, we'll talk about, the purpose of the policy and some of the risks that you're facing, and what it is that you're looking to cover in terms of your family and your dependents and your estate, and we'll do some net worth analysis and figure out, how much of a death benefit you actually need. And then we do an application. And a lot of times we will be required to do what's called a paramedic exam, where someone will come to your home and do a blood and urine sample and a height and weight, and we'll do a short questionnaire. It should only take about 15 to 20 minutes. Sometimes it takes half an hour. And then it goes through the underwriting process, where someone from the insurance company will review that data. They may request some medical records from your physician, although they may not if you're very healthy. And then from there, they will offer a rating. And then at that point, we solidify what exactly it is that the person wants to do with their policy. One of the things that is a big myth is that people whose children are out of the home and are no longer dependents, they're all grown, is that they no longer need life insurance. That may or may not be the case, but very often older people are getting life insurance. And by older, I mean, 50 to 65 or so, um, for different reasons. One of the reasons is that they use life insurance as a complement to their 401k and IRA and retirement dollars to help them manage stock market volatility because they'll be able to pull out cash value when the stock market is down so they're not having to sell low. Another reason that's becoming even more important is for funding long-term care. Long-term care is becoming an increasingly expensive and a more important part of retirement because people are living longer and we're having uh, uh, accelerated volatile events in terms of our health at the latter part of our lives. And it's becoming increasingly expensive. Here in Southern California, a long-term care facility could cost as much as $15,000 a month, and that could quickly drain someone's retirement dollars. And so you could get a traditional long term care policy, or you could get a life insurance policy with a long term care rider that will pay you a portion of the death benefit before you pass away to help cover those costs. Or if you never enter into a long term care scenario, they will just pay you the death benefit. Uh, Another important reason is for wealthy people. Most people think that, hey, wealthy people, who have several $1 million or maybe tens of millions of dollars don't need life insurance. And that's not true. One of the reasons that we need to consider life insurance if you're very wealthy is to help pay for estate taxes and to remove assets out of your estate. We can use irrevocable life insurance trusts, spousal lifetime access trust, charitable trust funded with life insurance to help remove assets out of your estate or to pay your taxes, your estate taxes when you pass away. This is becoming really important because right now we're headed towards the end of 2025, and that's an important date to know if you're worth quite a bit of money because estate tax limits are very high right now, but they're going to be sunsetting at the end of 2025. And so we don't know what's going to happen at this point. Most people and most estate planning attorneys are understandably kind of waiting to see what happens, but it's very likely that those very high estate tax limits are going to be dropping and could drop significantly at the end of next year. And so a lot of families who are not in an estate tax situation may find themselves in a situation where maybe a life insurance policy is going to make a lot of sense for them. So these are some of the things that I talk about on a regular basis in terms of life insurance. If there's any way that I can help you with your life insurance and review, maybe you want to review your policy or your needs analysis, I'm happy to do that. If you have life insurance through your job and you want to have a policy for yourself, maybe you need more coverage, or maybe you want to have a policy outside of your job, that's always a good idea. I'm happy to do that and walk with you through that process. My name is Keith Conley, Certified Financial Planner, President of True Legacy Wealth Management, and partner at Wealth Teams Alliance. I thank you so much for your time, and we'll see you next time.